Hello, excited to talk to you today about investing in Black businesses. As a disclaimer, this is not a solicitation for investment, but merely an informative presentation. And I'm going to start with talking about the current state of Black business in the country. And really, we're going to talk about that state in a pre-COVID sense, because the pandemic has obviously exaggerated many of the things that we saw. So the Black population in the country makes up 13.4% of the population. Yet Black business ownership is at 2%. So obvious there's a big gap between the percent of ownership in the country and the percent of the population. Not a surprise given the historical context of Black and brown populations in the country, but something that we need to work to rectify if we're going to create opportunity in these communities. And so we're seeing actually some new business growth in Black and brown communities, and excited about that. And you see on the chart on the right, that growth in the U.S. firms, the Black and brown businesses have been outpacing white businesses in terms of new starts. On the next slide, we would take that a little bit deeper, and we start to figure out what's happening with Black and brown businesses. And again, Latino businesses are 1.7 times more likely to start a business. And then Black businesses grew by 400% in 2018, all good information. However, when we look at the capital available to Black and brown businesses, we see that there is a clear lack of equity between that and their white business counterparts. In fact, Black-owned businesses are have three times less capital access than white businesses, so they start with less capital. And then BIPOC businesses are really forced to seek alternative financing because of that, which comes in at a higher price. On the next slide, we really talk about the challenges for entrepreneurs to get to capital. So we've identified the issue. Now let's talk about the challenges and why. Less personal collateral. So oftentimes entrepreneurs are utilizing equity in their home or equity in other assets, and to leverage those for lending for investments for new businesses. And these communities don't have that. Higher financing costs we talked about before, because you're seeking alternative financing. Less cash flow buffer. So financing is an expense for a business. So if your financing costs are higher, then you have clearly less money in terms of profit and wealth and equity in your business. And then less network wealth. So not being able to access friends and family money or equity to help grow your business. And all of this means that businesses stay smaller, have fewer employees, have less revenues, and have less impact, quite frankly, on the communities that they serve. The opportunity is, if we can actually solve this challenge in an equitable way, we can actually get 1 million more businesses in the U.S. and 300 billion more in additional income as well. So the solutions have to be around figuring out how to get access to capital for these BIPOC-led businesses. That's pre-pandemic. The pandemic, of course, brought in an external shock that really hit an ecosystem of Black and brown businesses that was already weak and already thinly capitalized. And so not surprising to see the results, which are that there are more business closures on a racial basis amongst Black and Hispanic businesses than amongst white businesses. And that's just a clear indication of the lack of resilience of these businesses. True, it's an unusual shock for sure, but nonetheless, it's definitely a way to see the inequities in access to capital and resilience in the space. So going to slide 8, now is the time to really address those challenges. And the sacrifices of Breonna Taylor and George Floyd, the awakening of racial equity awareness in this country means that there are a lot of investors that are very interested in helping to solve these issues. And so this is an excellent time to really dig in, figure out what the issues are and how we're going to solve them. We also have a bunch of literature out about the history of economic challenges for Black and brown folks in this country. So we know the issues and we know the solutions. Now the question is, are we willing to make the sacrifices to fix the problem? Moving to the next slide, the other aspect that's happening that most folks know about is this increase in awareness amongst customers. And so now you have customers more interested in patronizing Black businesses and finding ways to support the Black business community. So you both have the investors and the customers. And so it's a great time to try to figure out how to solve some of these problems and put us on a new trajectory. So moving forward and thinking about solutions, on the next slide, we have the business ownership can solve the racial wealth gap. This is not a new concept. What I like about the McKinsey paper report that put this together is we're talking about community-based businesses and not just the Silicon Valley, VC startups. And I think those are critical. Growing those community-based businesses are critical, creating local impact and racial wealth equity changes for communities around the country. So I'm going to step back for a second and talk about LISC and LISC strategic investments so you get a sense for who I work for and where I am and what we do in general. On the next slide, you'll see that LISC is one of the largest CDFIs in the country, 20 billion invested over 40 years, and a rated entity. We invest in real estate and businesses around the country, and we have 36 local offices, which is a great combination of local context and presence with some national powerhouses in New York and Chicago and DC to help support those local offices with financing solutions. On the next slide, you'll see LISC track record, and this is particularly with respect to small businesses. And we were getting into small business in a pretty major way before the pandemic, and the pandemic really scaled those efforts tremendously. So the New York Forward Loan Fund we'll talk about later, over 1,000 loans out the door in New York, small business lending of more than 131 million, small business grants of around 12,000, and technical assistance to almost 15,000 businesses. And we focused all of this on MWBEs, minority businesses in the country, and really have learned a lot about what they need and where they are and how we can help grow those businesses. The next slide, I'm talking about LISC Strategic Investments, which is a group that I manage within LISC. And this is really the impact fund group within LISC. And we manage some place-based funds and national funds around the country. On the next slide, you'll see we manage close to $1 billion worth of funds across 6 funds, and it's still growing. Many of them real estate focused, some of them business focused. On the next slide, a few of our funds are local affordable housing funds like the Bay Area Future Fund, Chicago, the Charlotte Fund, and the Detroit Fund. And then the New York Fund is a place-based business fund, and the Black Economic Development Fund is a national fund for business and real estate investing. So let's talk about small business lending. I'm going to dissect the field into small business, medium, large business, and then lending, and then equity. On the small business lending, the first fund I'm going to talk about is the New York Forward Loan Fund, which was, we worked, Calvert and CRF and LISC were all partners in creating this fund. It was a call for response to the issues in New York State with businesses that needed capital right away. The product being offered was a flexible loan product. What was exciting about the fund effort is we worked with all of the existing partners and CDFIs on the ground to get this money through them and out to the borrowers. And we were able to raise a pot of capital that they could use to do that. On the next slide, you'll see a similar effort that happened in the southern region of the company that's underway right now. And what's exciting about this is if you think disparities in access to capital are strong in the north of the country, I would argue they're stronger in the south. So what can we do if we bring access to capital to Black and brown businesses in the southern part of the country as well, which will be exciting to see from this fund. Moving on to medium to large business lending, and talking about our first fund, the Black Economic Development Fund. In this category, as I said before, we raised money from treasurers, from some of the largest companies in the country, and really around the concept of providing short-term debt, but flexible debt to Black businesses, Black entrepreneurs, Black banks, and Black anchor institutions. And it's been an incredible journey. Our first deals have been with Black developers who are utilizing the capital to grow their businesses and have more agency in the developments in their communities. And so that's been great. On the next slide, I show you a little bit about the ingenuity with how we structured the investments in the funds. We needed to provide the treasurers with some emergency liquidity options if they needed that. And so we structured the fund to have a cascading of different loan deployment durations so that there would be capital in the fund in case they needed to redeem their ownership at some point. On the next slide, we talk about the Entrepreneurs of Color initiative. which is an initiative that's been around for a while with Chase and Fifth Third. And they've been giving grants and loans to CDFIs around the country that really do a lot of small business lending to minority companies. We're now creating a loan fund where we can actually create a secondary market or liquidity event for those CDFIs that can sell their loans into this loan fund. On the next slide, you'll see how that works. So we're going to be in the fund buying the loans from the CDFIs, and they're going to be buying the loans, of course, they're making loans to the borrowers. But we're hoping to accelerate the amount of liquidity available to Black and brown businesses through this vehicle of providing extra capital. So the last area that we want to talk about is equity investing and venture capital. And this is, I think, one of the most critical areas for small BIPOC businesses. And we'll start with talking about that. So when we look at the different products that have been provided to these businesses, we can start with relief grants, which are really small, recoverable grants, which are a little bit bigger, relief lending, which is bigger still, but it's lending, and then, of course, traditional lending. And what we figured out was missing from really feedback from the businesses themselves is this sort of small equity-like investments, which is hard to do, but I think it's important. If you look at the next slide, you can see the importance of that particular ingredient in the ecosystem, in that these businesses, though they're starting and since 2007, 2017, we've seen 79% increase in Black and brown businesses. Again, are they growing, and are they able to create the impact we want in the community to solve the racial wealth gap? And the answer is no, and why? They are creating fewer jobs with less revenue, and more vulnerable to shocks, so they go out of business more quickly. So all of that is not a good recipe for resilient large businesses. So the next slide, in thinking through what we need to get to resilience, we've defined it as this broad category that includes growing the businesses in size and number of employees, revenue and customer base as well, diversifying the business into multiple business lines, and then entering industries that have a higher barrier to entry, and better profit margins as a result. On the next slide, I talked about the program overall for small business equity at LISC, and really it's around this growth equity product that we've created that is able to be put out at smaller dollar sizes than traditional equity, combined with technical assistance programs that are already in existence to help these businesses grow their acumen and their plans. And then finally, this product creates a track record for the business of investment success that they can utilize to go out and raise more capital. So how does it work? On the next slide, we talk about the sort of high level of taking grant capital and then combining small business recoverable grants with revenue-based equity investing, two concepts that aren't new but haven't been put together before, to create a product that looks like equity to the business and feels like equity to the business as well. On the next slide, in comparing microequity to debt and grant and traditional equity, we think about the flexibility of the capital, the must-pay qualities, the track record it can create, and the size of the investment. And we think that this is the only one that satisfies all those things, again, for existing businesses that are looking to grow. The other solutions are good as well for scaling, but if you really want to grow and expand into a resilient business, you need something like an equity product. So that's really what we do within the equity space for small businesses. You think about high growth businesses. In the next slide, we talk about the access to venture equity for Black and brown entrepreneurs that are looking to grow high growth businesses. And for a long time, we've been trying to push a number of things in terms of bias training, et cetera. But at some point, we think we also need to support diversification of fund managers in the space, because they are known to allocate more equitably in general. And so we have started to invest in funds that are led by minority fund managers, and ideally targeting companies led by minorities as well. And so the Fearless Fund is our first investment in that out of Atlanta, and they've grown tremendously and done really well. I'm excited to do a whole lot more of that. So on my final slide, really, the call to action is obviously, if you're in this space and you want to work together on any of this stuff, let's talk about that. But if you're not, you can still do a lot to help the cause. Getting your company involved, being intentional with personal banking, bankblank.org, investing or lending to Black businesses, and then becoming a good customer of Black businesses as well. Finally, I'll say, if you're interested in learning more about this, feel free to contact me or Michelle on my team. And thank you for your time.